Tesla stock analyst predicts more price cuts to come. Tesla analyst Dan Ives from Wedbush predicted that the company has room for more price cuts in the short term. During an interview, Ives explained Tesla's current situation and its valuation. Dan Ives stated that Tesla had to ultimately rip the Band-Aid off, referring to the company's price cuts. "I think that was the smart poker move that Musk did it earlier this year. It's a big reason why the stock's up. Now, of course, the debate will be, do they need more price cuts?" The Wedbush analyst predicts that Tesla might cut prices in the United States and China again sometime this year. Because of Tesla's margin structure, it gives them so much more flexibility than other vendors to do these price cuts, explained Ives. "And I think that really continues to be the story here, especially as battery costs ultimately get reduced over the coming months and year. Tesla is well positioned in the electric vehicle market, partly thanks to its continued efforts toward innovation." During Tesla's 2023 shareholders meeting, the company elaborated on its technological updates and advancements in the S3XY lineup and Tesla Gigafactories. Each time Tesla improves its vehicles and factories, it also reduces costs. Tesla ahead of 2023 guidance. Tesla set a guidance of 1.8 million vehicles in 2023. Recently, the company delivered approximately 422,875 cars and produced a total of 440,808 units in Q1 2023. The longtime TSLA bull noted that Tesla's guidance is the foundation of investors' assessments. Some investors and analysts believe Tesla needs to catch up on its deliveries and won't meet its 2023 guidance. TSLA bulls believe the company is on track to meet its 2023 guidance. "I think 50% was really something they took off the table on the last earnings," Dan Ives replied when asked if Tesla would be able to grow 50% year-over-year in 2023. Last year, Tesla did not set a specific guidance. Instead, the company stated it would aim to grow 50% year-over-year, which some reporters still use as a basis for their TSLA assessments. Now granted the longer-term 50% goal, but really the number that the street investors are focused on is $1.8 million, Ives explained. "And I think if you look at that, Tesla is on or actually ahead of that pace." Source: reposted and summarized from Maria Marano at Teslarati. My take: if Tesla cuts the prices anymore, some other car companies are going to be finished. NIO says Tesla can't influence EV prices in China as it can in US. NIO CEO William Li notes that Tesla doesn't dominate in China, so it simply doesn't have the great influence to start a price war in China. The US EV maker may be able to provoke a major price war in its home market and in many areas across the globe, but China has successful EV rivals unlike those in any other country. Tesla cut prices a few times this year in many markets across the globe. In fact, the automaker had already been cutting prices and offering incentives in China toward the end of 2023. CEO Elon Musk has made it clear that Tesla's main rivals are gas-powered cars, and its only EV rivals worth celebrating are those in China. Regardless of Li's recent words, Jeff Chung, a Citi analyst, shared that Tesla's price cuts have already forced some brands in China to see cancellations. Tesla lowered the price of the popular Model 3 and Model Y by as much as $7,000, and it's causing EV buyers to closely reconsider their options. According to Electrek, China's Li went on to say that Tesla cut the prices of the Model Y and Model 3 to challenge rivals in the country since the US carmaker's EVs are less complex in functions and configurations compared to Chinese car brands, such as BYD. The NIO CEO also claimed, Tesla can fix vehicle prices in the US with a market share of over 60%, but not in China, where it holds only about 7%. Interestingly, Electrek adds that since Tesla reduced its prices, more than 40% of brands have come forward with incentives on both gas and electric cars in China. Following suit with Tesla, rival XPeng advertised discounts of up to over $5,000 off its most popular EVs. Meanwhile, NIO CEO Li admits that his company's gross margins are not high enough right now to get involved in a price war. Speaking at a recent conference, he said that Tesla's blind price cuts will create unnecessary cutthroat competition and turmoil in China's auto market. Source: reposted and summarized from Stephen Loveday at Inside EVS. Will Tesla cut prices again this year? Analyst says it might happen. Tesla's massive price cuts implemented at the beginning of this year in key markets like the United States, China, and Europe have sent shockwaves across the industry. The price reductions forced some competitors to follow suit even though they had nowhere near the same margin depth as Tesla. While things have largely settled since January, Tesla still has room for more price cuts in the short term, analyst Dan Ives from Wedbush Securities believes. In an interview with TD Ameritrade Network, Ives noted that Tesla's Model 3 and Model Y price cuts especially have paid major dividends for the EV maker. That really, fundamentally was the best decision they've made, in terms of cutting prices to stimulate demand. I think ultimately that's still paying dividends today, Ives said. Mind you, he added that Tesla will have tighter profit margins going forward, and we'll learn how tight on April 19, when the company is scheduled to report full first-quarter financial results. The big question will be margins, as cutting prices will have an impact on this front, he said in a note to clients on April 2. Despite the slimmer anticipated profit margins, Dan Ives seemed inclined to believe that Tesla may cut prices again sometime this year. Their margin, it gives them so much more flexibility than other vendors to do these price cuts, Ives said. And I think that really continues to be the story here, especially as battery costs ultimately get reduced over the coming months and year. The Wedbush analyst stated that even after the price cuts earlier this year, Tesla has much higher margins than the industry average, and that would allow it to cut prices even more if it wanted to. A longtime Tesla bull, Dan Ives said that demand appears very solid. He also downplayed the fact Tesla's stock price dropped a bit after the company released its Q1 2023 numbers, describing it as a knee-jerk sell after the stock almost doubled so far this year. As for the company's annual growth target of 50%, Ives said Wall Street investors focus more on the 1.8 million vehicles Tesla has forecast for 2023. I think if you look at that, Tesla is on or actually ahead of that pace, he said. Source: reposted and summarized from Dan Mihalascu at Inside EVS. Tesla plans to produce 4 million cars per year on new Gen platform. According to a report, Tesla plans to produce 4 million vehicles per year on the new Gen platform. At the same time, 2 million cars will be produced in North America, 1 million in Europe, and 1 million in China. On Tuesday, China's 36 Krypton learned from several industry insiders that Tesla is planning a massive production capacity map for its new low-cost models. According to the information, it will be a small car similar to Model Y. Tesla is building an annual production capacity plan of up to 4 million vehicles. 4 million in production capacity will be distributed across global factories. The main production center for the model on the new Gen platform will be Giga Monterrey, Mexico, which is expected to produce 2 million cars a year. Production plans for Giga Texas are not mentioned. Another 1 million vehicles will be produced at Giga Berlin and 1 million at Giga Shanghai. Officially, the start of production of cars on the new platform became known during Tesla Investor Day, when the company revealed the construction plan of the factory in Monterrey, Mexico. The factory will be located on nearly 4,200 acres, which is 68% larger than the 2,500 acres of the Texas plant and about 20 times the size of the Shanghai factory. In addition, Tesla recently applied to expand Giga Berlin and plans to grow production capacity to 1 million vehicles per year from the current 500,000. Tesla first mentioned developing a new, affordable car during Battery Day 2020. However, at the time, this was only part of the strategy and had no more concrete plans. The production of this model was directly dependent on how quickly Tesla could ramp up the production of its 4,680 battery cells. It is obvious that the prototype of the car and the methods of its production have already been developed, and Giga Monterrey is being built taking into account the particulars of its production. According to rumors, the presentation of the new model will take place during the groundbreaking ceremony of Giga Mexico. Source: reposted and summarized from Eva Fox at Tasmanian.